Hello, and good morning, guys. It's a lovely Friday morning, and today is the 24th day of July 2026. And this is what we were looking at yesterday. Yesterday, we were looking for potential buys above this level. We never got any confirmation for the buys. Our alert was never triggered, so we didn't get any confirmation for the buys. For the sales, we were looking for sales, potential sales below this level. This was a good level to take the sales. And once we got this trigger, we had this trigger here, this candle that triggered our sales, this one here, you can see it closed below a level with very good bearish momentum, a very long candle, and then very small wicks. As you can see the size of the wicks. This implied that the sellers had taken over the market. Remember, trading is just a tug of war between buyers and sellers. It's just that simple. A tug of war between buyers and sellers. When the market is moving sideways, the buyers and the sellers are at equilibrium. When the market is moving up, the buyers have taken over the market. When the market is moving down, the sellers have taken over the market. It's just that plain and simple. So here you can see the sellers are taken over the market from this candle here. You can see with the momentum, the size of the candle, a very long body, all small wicks. Then the next candle opened and closed below our level with good momentum. This was our signal for a sell. So I was waiting for a retest on this level here. We never got the retest. This is why we never got the retest. Uh, Once you see, let me teach you something here today. Once you see a breakout like this one, a breakout with good momentum like this one, the candle that breaks, the candle that breaks below our level, uh, the three candles for this you have to get three candles: the candle before the break, the candle that broke, and the candle after the break. Okay, so if the wicks of the candle before the break don't overlap with the wick after the break, then this here, we call it the fair value gap. We call this the fair value gap. And how you trade this fair value gap, let me show you. This is the fair value gap from here to here. This is our fair value gap from here to here. Once you see this gap, you can extend these lines. Once you see this gap right after this break, then there's a very high possibility that price will not get to retest this level here, the level that was broken. Why? Because there's a lot of imbalance here on this fair value gap. There's a lot of imbalance. Price just moved in one direction. So when price gets here to fill this gap, at 50% of the gap, if you see a candle closing above 50% of this fair value gap, if you see a candle closing above 50% of this fair value gap, then that means the gap will not hold. But if you see a candle wicking into the fair value gap and tapping away, then that fair value gap held. So this is why we didn't get a retest of our level here. This is how you would have entered this trade. You'd have taken this your entry here. You'd have taken your entry here. Stop loss, just where we had our stop loss. Is it stop loss? You'd have taken your entry there, stop loss there. Then target would have been this. This was my ideal target. Then you'd have targeted this one here, this level here. And this is how you'd have taken the trade. would have been activated here. Once you see this fair value gap forming right after the break, then know that there's a very high possibility that you're not going to get a retest of this level. Price will be rejected on this fair value gap and continue pushing down. Same for the buys. If you see a breakout with a forming a fair value gap, if you see a breakout forming a fair value gap right after the break or just where the break is, say the break was here. Say this was our break. Say let's say this was our breakout. You can see this is also a fair value gap. Then price would have, you can see what it did. We had a rejection here. This candle came, wicked, and closed above the fair value gap. Next candle came, wicked around 50% of the fair value gap. Still got rejected. Once this candle closed at below 50% of the fair value gap, then that fair value gap was breached. And that means the fair value gap will not hold. But you can see what happened. Price came down, continue pushing down. Once it came back to this fair value, this level here, continued pushing down. So these are like support. This fair value gap is was our support here. Once it was broken, it became the resistance. Okay, so same for this one here. This fair value gap acted as a resistance for price when it came back to the retest this level and push down. So for those that took an impulse sell here and got this move, it was a very good move. It was a very good move. You can see how far this went. Almost 500 and something pips, if I'm not wrong. Yeah, this was 614 pips. That was a very good for gold. If you had a lot size of say about 0.05, you worked up with something good. If you had a lot size of 0.1, 0.2, then you can do the math. See how much you would have made. Okay, so that was yesterday. That was a win for yesterday for whoever took that trade. For me, I missed it. I was on the move. I didn't see this fair value gap forming. Once we had this break, I just set a limit here, a set limit here, waiting for price to come retest and drop. And my sell limit was never activated. Okay, so that's how I missed that trade. But it was a very, very nice sell. Very nice sell. So, real quick, let's do our analysis for the day. Let's do our analysis for the day. That was a very good sell for yesterday. Very good. Whoever caught that move, I don't know why you're trading today. If I had caught that move myself, I would be out of the market today. So let's see what you have today. Get on the fundamentals. Excuse me. I have a very bad cold. The weather is chilly here. It's the cold season. It's flu after flu, flu after flu. So let's see what you have on the fundamentals today. Real quick. And any high impact data, nothing high impact today. We have some medium impact on GBP that was at 9, or still coming up in the next 23 minutes. On the euro, we have the French flash manufacturing PMI. All this is on the euro. Then you have some medium impact data coming out on the GBP again at 11:30. The flash manufacturing PMI, that's at 11:30. On the USD, we have nothing high impact, nothing medium impact. So today is a free market. Okay. unless we get any breaking news regarding the war on US and Iran. If either party makes a statement, makes a tweet. You know who's famous for his tweets, Mr. Trump. Uh, anything that could shake the market, watch out for that. Let's see what Iran says it attacked U.S. facilities at Jordan's Al Azraq and Bahrain's Sheikh Issa air bases. Arabic is tough. Trump, from this point forth, any damages to ships will be paid by Iranian money. Then Trump to impose forced labor duties on. No, 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 no. So watch out for anything breaking out regarding the U.S. and Iran conflict. That could shake the market. Okay, but for USD, today is a free market. No fundamentals. Nothing on the fundamentals. So let's do a quick analysis. Like always, we start our analysis on the 1 month. Is to cater for all the type of traders we have here. We have the swing traders, we have the position traders, we have the day traders, we have the scalpers. So I like to cater for all. So real quick, that's the resistance up there. Our support, monthly support is down here. This is our monthly support. You can also use this week. Yeah. On the weekly, this is our support here. And the resistance, the most immediate resistance, before we get to these levels here, is the most immediate resistance on the weekly. On the daily, on the daily, we are looking at these levels here. We have this break here. This is the swing high, and this is the swing low. But internally, we had this structure here. So I'm going to mark the internal structure because we have to break this internal resistance first before we can come up to this swing structure here. Okay. So these are most immediate resistance. We can also mark that resistance there. Okay, but this is the most immediate resistance on the weekly. If we break above this resistance, then this is the next resistance that you're gonna face, and the resistance is just liquidity lying above here, liquidity lying above here. So price is attracted to liquidity. Liquidity acts as magnets to price. So if price wants to come up, it will be attracted to this liquidity. This is what will pull price up, the liquidity above here. The liquidity above here will pull price up. The liquidity below here is pulling price down. Okay, so that's just it about liquidity and support and resistance. So on 4 hours, we're done with the daily. Yep. On 4 hours, on 4 hours now we are looking at let's see, still the same levels. Still the same levels we had, but now let me switch it up a bit. 4 hours, we had this break here, we had a shift here, we had a shift here, break of structure here, we had a 4 hour break of structure here. Let me deal with the internal structure first. Let me deal with the internal structures. We had a break of structure there, then we had a shift here. This is internal structures. Internal structures, don't get confused. So we had a church here, the price market came down all the way here. Then we had another break here, but this is on the lower time frame, I believe, on 1 hour. So on 4 hours, this is what you are looking at. We are looking at this high here and the low down here, right? Yeah, this is what you are looking at on 4 hours. So move this to the body there and move that to the body there. Okay, identify our wicks as always. Let me use a lower, yes. Yes, I'm trying to be quick because I see time is running out. Time is running out. So there, and then identify that level there. So this is our 4 hour range. This is our 4 hour range. We had the small pullback here, but this one we're stuck. We're stuck. Where we stuck? Yep. No, that is not a structure. But on 1 hour, this will be a structure on 1 hour here. So let's go back to the candlesticks. Jump down to 1 hour. Let's see what I'm talking about. Excuse me. Sorry. So this is what I'm talking about. On 1 hour, we had this structure that was broken here. Is the lowest point. The break was here. This was a break here. We had a break of structure there. So this is our 1 hour resistance. Once price came here, pulled up to this level. This is our 1 hour resistance. 1 hour resistance is there. And then you have our 1 hour support down here. So we can do away with this one. Is a level here. Now we can do away with this one. We can remove this one. Okay, so this is how you narrow down price to your levels. This is how you narrow down your levels down to where you pick your entries. Okay, so this is the 1 hour break of structure. This is the high, this is the low. So this is the resistance, this is the support. See, we are stuck on the 1 hour support. If we get a break below this support, then these are the levels we could be looking at. 4,000, the 4,000 level. Then we have this at the level here, and these are the levels here. Why? Because liquidity is below here. Below these lows here, we have liquidity. Below these lows here, we have a liquidity pool. Below these lows here, we have a liquidity pool. This is sell side liquidity, sell side liquidity. Those are just terms, but just know there's liquidity. Whether you want to call it sell side liquidity, whatever terms you give it, that's just liquidity. Okay. So, yep, we are there. On 30 minutes. On 30 minutes, we still have the same structure. We're looking at the same structure. We're looking at the same structure on 30 minutes because that was our break of structure here. We've not had another break here. So, for trades for safe sells, I'll be looking for sales below this level here. I'll be looking for sales below this level. And this is the 8 a.m. candle. Okay. So I'll be looking for sales below this level. If we get a candle breaking below that level with good momentum, that's my potential sell. Potential sales below that level there. And for the safe buys, we are looking for buys above this level here. If we get a candle closing above this level here with some good bullish momentum, then that's my potential buy area. Within this level, within here, this would be my no trade zone. This would be my no trade zone here. No trade zone here. But always, I want to take care of those who have a high risk appetite. You could take there's this resistance here. You could take a trade from this level here. You could take a quick trade from this level here up to this level here. You could take a quick buy. You could take a quick buy here. If you get a break, above, take a quick buy there, from there to that level there. That's a quick buy there for the safe buys. Remember, trade what you see, not what you think. Time has run out, but this is what I'll be looking today. This is what I'll be looking to trade today. For the buyers, for the sales, I'll be looking to target these levels below here. Remember, we have some resistance support that we could face around these levels here. This